Thanks for joining us. Let's get going. It's bang on 6 o'clock. A lot of people said they were coming, so we'll just carry on and let's see if they turn up. Right, so let's just take a look at what I've been up to this week so far. I don't know if any of you were there on Saturday at the Trader Summit in Covent Garden. Really good day out. A lot of interesting people, quite a range of traders from very experienced to complete beginners and a lot in the middle. Anyway, let's just take a look at what we're doing in Scalper School, what we're actually doing in the live trading room, and how we perform, and what's in it for you, why you might want to consider joining in. So let's just take a look at this week initially, and then we can go on to the answer that question. Let's come out of that. Let's get rid of that. Right, let's just take a look at where we are now. So what I've been doing at the moment is calling. So let me just start again. The services in Scalper School include a 5-day chat room, a live trading room for 3 Euro sessions and 3 US sessions a week, and then 3 videos during the week to update everybody, and obviously, and actually alerts to your mobile phone as well. So what are we doing? What are we up to? Well, what we're interested in is, as scalpers, we're looking to grab 25 pips at the open, and then once we've got 25 pips out of the way, then we're looking for potential bigger moves at very low risk. So what we've been doing today is trading the Dow, and I'll show you exactly what we did on the Dow. And we've actually got one of the members in the room today, so he can vouch for, David can vouch for what we've been up to as well. So I was actually got caught up in a late lunch, went to a very nice Italian restaurant, and this Italian chef was quite slow, so I was supposed to open the room at 1:20, but got delayed, which was actually very healthy. It worked out really well because that was the open, that was the high and the low at the first 5-minute range, and we didn't touch it. What we did do was came back into the room, so I opened the room just as all this was going on. We sat there and waited until the markets settled down, and then I actually started buying this low here. Now I did what's called a marker lot. A marker lot is a trade that's got very little value. It literally just gives me an emotional attachment to the chart, but doesn't commit me financially. So I started buying a marker lot down here because of this zone. I'll tell you about the zone in a minute. And so we started buying down here. I did one trade to the upside of 25 pips. Got my daily dose. Actual fact, I think it was a little bit more. Then I started going in with my futures accounts. They're actually sort of using. So that was a confirmation. Coming out of that zone was confirmation. Bought a pullback here. Took it for about 80 pips. Started to trail the stop up and got stopped out. And at that point, walked away. So I got plus 80. By the way, in the morning, I've already traded the Dow. I've already done, I think it was plus 30 on the DAX in the morning. So this is all just today. So when I realised that this wasn't going to hold, I actually thought this was going to hold, and then when I realised it'd fallen over, I started calling it long here, and I'll show you my calls so you can see that this is confirmed. This is not just chat and hype. And so started buying this low and scaling in and out, and here we are just coming back to this little range here. So it's an interesting day. Let me just clear all this clutter away and let's have a real look about what's going on here in this chart. So this range here was the data. So we had trade balance today, Got trade balance today and GDP tomorrow. So that's why I think this is such a great, one of many great weeks to trade, as we get some real decent volatility into this market. So although this is a 5-minute chart, this is just the core element of Scalper School. And what's around this, the reason why I was calling this low here, the reason why I was buying here and trading that move is because of our golden anchor. So I'm not going to discuss the golden anchor with you here because we've got a lot of non-members in the room, and members have paid and subscribe and to have the benefit of the golden anchor. So you can have the benefit if you're interested. But in the meantime, let's just talk about, just to get a view on what's happened today and a view on this week as we get to these crucial data levels out of the market. So you can see how, even though we've had, that's quite a significant sell from a high of 750. So I got to a low of 400. So it's a 350 pip push to the downside. At the moment, we've had 300 pip. So we come down 350 and we've come up 300, I think, plus 300. Okay, so if we would then pan out and pull back from this, this is the preparation I was doing in the run-up to this week, and this is a 4-hour chart. So if some of you are busy people, maybe you have got full-time jobs or part-time jobs, one way that you could still trade intraday is on a 4-hour chart. So here I've got Fed days. These are all Fed days. These are the last 3 Fed days, and you will note that on the back of this, interesting, although this Fed day here we had a significant drop, ultimately when we came out of this, so we came out of it here. I realise it's a bit small, squished up, at least you can get the general idea. That was the pullback to the Fed range there. So that's your confirmation that this is potentially going to push the upside, having spent this time on the underside of it. So that was a nice move from 23,850, and eventually we wound our way up to 26,250. So it's a nice old move. And then having formed this key trend line here, we then got a couple of double tops and dropped over and pulled back. So you can see this is the current zone. At the moment we pushed into it the next day and pushed right out of it again. So fascinating week. So this is all part of the Scalper School prep. Although we're scalping, we've got to have a real grasp of what this market's doing and where this market's going. We're not just opening a chart, bunging a 5-minute chart up and then deciding which way we're going to do it. Because what the danger of using the open trading range, and in trading it, we all know that there's no hard and fast system for trading this. Anybody's system can only ever be a certain percentage successful. Our system, after 9 months of data, is independent study of 9 months data, is 77% successful. Now, when you get an open range, a 5-minute open range, and we've had 2 or 3 days over the last couple of weeks where it's gone to the upside, it's gone to the downside, and so on. So that's why the anchor chart is so important, because you could get seriously chopped around in this, but the anchor chart is there to what we call the golden anchor, sits outside of this and allows us to pick off these levels and manage the trade. Now, how's that work today? Let's just see some actual evidence of how that's worked today. Let's just go to this. Let's just go to, hang on a second, why is that not? Bear with me one moment. Just stop the share for about, screen share for about 10 seconds. Here we go. Okay, right, I'm with you. Put the screen share back. Right, okay, so let's have a look. And this was recently, so 2 trades, 2 winners DAX so far this week. Here we are. This is 26. This is yesterday. This is what I posted yesterday in the room. So let's see what I was up to. The OTR is the open trading range. 550, we're looking to buy the Dow late afternoon, and we did that for 94 pips. So talking about the June contract is hitting a certain level, because the June contract, the actual contract that guys like me are trading, the futures contract, is separate, is different from what the retail brokers. So if you've got an account with IG Index or CMC or any of the others, they make their own books. They're not allowed to duplicate the actual live CBOT futures market. So today, for example, the June contract on the CBOT Dow, called the YM, June YM was at least 20 pips away from what the retail guys are quoting. So that's one of the reasons that our members benefit a lot, because I can call what's happening in the June contract, which you can't see in your retail brokers accounts. So I shorted the Dow yesterday. That dropped quite hard, and then I started buying, came back into the left it on. I actually went out for about an hour and a half, and then I came back and I flipped it, started buying the Dow. So all this is all in the live trading room, all recorded, all documented. Okay, thanks for that question. I'll come back to that in a moment. Yeah, anybody wants to post in a question, that's fine. I'll come back to it if I don't answer it straight away. So here we go, 40 minutes after the Dow open. So the Dow opens at 1:30 UK time. So I'm talking about getting short here yesterday. These are the targets. This is what I'm quoting. So I'm telling everybody I'm getting short. And then later in the afternoon, that's when I got short, went out for an hour and a half, and then came back and flipped it. It's 8th of March, long after the open today. I'll buy mid open trading range. 70 pips profit here. Yes, I was shorting the FTSE early March. I was swing trade FTSE. The short was working, and I scaled out of it. We'll look at the FTSE in a minute. But on the 9:37 a.m. in the morning on the 7th, I was suggesting we short the FTSE, and there we go. Okay, let's come out from that. Let's just look at some real stuff today. Let's come back to the charts and take a look at, I think so. My stop, my default stop is 15 pips, but if you've got it depends on the 5-minute range. Ordinarily, if I am long, if I'm buying an open range, obviously my stop's going to have to sit on the underside of the range. So on occasions, the Dow has a huge, sometimes 60, 70 plus pip range, I do adjust the stop. I'm not going to sit there looking for 25 pips with a massive stop like that. We'll come on to the risk-reward ratio in a minute, because obviously that's crucial, and we're talking about quite a different risk-reward ratio to what you'd normally trade with. And of course, if we're shorting again, ideally you need to sit the stop on the other side of the range, wait till you get confirmation of the break, and then grab your 25 pips, and then I reload. So if it drops, if I get my 25, 30 pips, I'm happy, and then I will reload on a pullback, and then when I reload, I tend to move the stop to break even and see if I can get a runner. So although we are scalping, we are looking for runners as well. So as far as what's the range for the 4 hour? Okay, good question. So if you are trading on I mentioned you can trade on a 4 hour chart, you've got to scale the whole thing up. If you're going to take a 4 hour signal, then you've got to have a correspondingly higher stop. So here you get an engulfing bar. I'm not a massive candle fan, but at times setups like this help. So the market was obviously struggling. These 4 hour bars are getting narrower and narrower, and then we get an engulfing bar. So I would send out a signal, get short here. Let me just go through the entry and stop on this. So the entry would have been a break of 145. You've actually, on this particular market, you've got to have about 130 pip stop on that, but the risk-reward ratio on these trades is much greater. Now, if you've got this kind of support here, so the target for the short for me would have been 25,930. Let's write this down. So 25,930 is the target. The entry was 26,145. You're going to need at least 120 pip stop. So your target is it's roughly 200 pips, give or take. Let me just double check that. Yeah, 135 entry, so 150 pip target roughly. 150 pip target for 120. That's not it's not a 3 to 1, which 2.5, 3 to 1 is a normal one. Had you have trailed the stop down, I mean, the main support down there is 25,775, so you could have trailed the stop down. We don't know that we're going to turn around here and come back. But that's the kind of statistics you'd need. That's the kind of risk-reward ratio you would have to go for on a 4 hour chart. If you repeat the exercise here, sell signal at Monday, 4 o'clock. So you go short to 25,995, a stop 230 pips higher, and then the support is right the way down here. So the risk-reward ratio, that's the risk. This is the reward. Back down to this bar here. Basically, whenever you get a big impulsive bar like this, the markets tend to come and follow it. So the risk reward there was nice. That was a 150 pip stop for that's at least 3 to 1, if not more. So that's the kind of thing you could do on these trades don't come up that often. But that's the sort of thing that you could do on a 4 hour chart. Let's look at the FTSE. So at the beginning of the month, I was suggesting swing trade short FTSE. So let's go to the daily. 3rd of March. Right here. End of February. Right. Started talking about a short here, thinking it could potentially break down this trend line and at least come and test 70.64. And we got this very, very nice push higher. And then ultimately got a massive sell signal. So there was no pullback there at the moment. I would have wanted a pullback to that 73.10, but we didn't get it, so I just left it. Okay, so let's just go to the so let me just another question. So the 4 hour is not based on a time range. I don't understand that question. The 4 hour setup, the 4 hour entry is based on the 4 hour chart and the bar behind you on a 4 hour chart. So I don't know if you want to try and rephrase that question, but I'm not clear about that one. Right, let's go back to, let's have a look at oil. I trade oil quite regularly. I've not traded oil today, but let's just have a look at, it's invent day today, so let's see what we got. I'll show you a trade, something that we trade in the room on data. Now that is the range, that's the 5-minute range of the inventories on oil. Now ordinarily with oil, I would wait for the initial direction, which is wave 1, wait for a pullback, and normally you'd retrace to where you broke down from, if it is a short, or where you broke up from if it's a long. So I would have ideally wanted a short at 60.10. This has just shorted on the mid-range. If I take that off and look at the mid-range, so it doesn't obviously it was so bearish it wouldn't return to the high. So we got close to the shoulder of the entry, the open of that range at 60. The high was 59.90. It's okay, it's not far off. So this is how you could handle a nice volatile day. If you wanted a day trade, this is what you could do on this particular day. Did this last week and it took 2 hours to retrace. Today, this has only taken 30 minutes to retrace. So at 5 past the hour, you get confirmation that this mid-range is not going to hold. So if you shorted at that 59.90 with a stop above 60.10, so you're risking that much capital for, so I've not drawn that complete, let's just do that. That much capital for this much reward. This is the main support area I have marked off since Monday. So that 59.04 was a key support area. That would have generated well, if you held on, it would have generated 100 pips in 3 o'clock, 45 minutes. Well, in actual fact, the main thrust, the main impulse to the downside was 35 minutes later. So 35 minutes later, you've got quite a decent number of pips. So that's something that you can do. Now, if I apply that data level to the Dow, this is what we've seen in the Dow, and I'll extend this so you can see it right across the day's trading. So we've got GDP tomorrow, so this is relevant for tomorrow. that is the range of the US trade balance. Now, one of the reasons why I like the trade balance is because I've been trading a long time, and in October 1987, I was trading the US trade balance. So that was the trigger for the October 87 crash, because 2 hours after the September 87 trade figures came out, the trade balance, the market started a massive 1987 decline. So I'd already sold 80% of my stock portfolio. I used to have a strategy based on value trading, which is more fundamental than technical. I sold 80% of my stock before this came out, the day before. So I'm very tuned into how the data works. So you can see we looked okay up here. The market confirmed the sell-off here, dropped a golden anchor support down here, which I called the long. We came right back into this range. So if we now close above here later today, that's extremely bullish. If we start closing under here, at the moment it looks like it's going to hold. We've punched into the top of the data range, dropping out of it again. At the moment it looks like it's going to hold, and we could potentially go all the way back to that 750 if we can close above here. So this is, you can scalp this. We were buying longs in here, or I was buying longs in here. Everybody was looking over my shoulder. I presume guys were jumping in there. You know, I'm not managing their accounts. They're not, you know, the members are managing their accounts, but they're looking over my shoulder. I was calling the low, I was calling the confirmation, and I was trailing the stop on the second lot. So the market rolls over, we break, we signal short here, we signal short here, but we signal long here. So all of this was plotted in the trading room. All of this, anybody who is a member in our live trading room can plot that based on the setups that we use, A for scalping and B for data. And that is what Scalper School is about. So the missing ingredient here is the anchor system. That's the missing ingredient. This is the core of what we're doing, but what we are actively doing in the trading room is using a system. Basically, I'll come up to your other point, Alan. It's entirely discretionary. You know, I invite people into my trading room once they've done the Scalper School program. It's a 4-hour program, and then so it's entirely up to the people in the trading room if they want to copy my trades or not. As long as they realise they're trading at their risk, that's fine. If they want to copy my trades, that's fine. Yeah, if they want to sit on their mobile and pick up the alerts, that's fine too. So whichever way. So I've designed the Scalper School system so that, you know, whether you're working and trading part-time, or whether you are actively in there, day trading full-time like myself, then you got the option of continuing to follow the trades and the signals throughout that day. All right, let me come back to your point. You clarified your question about the 4-hour chart. Let me just do that. Yeah, basically, I'm suggesting by looking at the 2 different time frames. The 5-minute chart is for active day traders, and the 4-hour chart is for busy people who might want to take intra-week trades. So, for example, yeah, we've got some of the people in our trading room are very busy and can only come in the trading room for the DAX before breakfast, you know, between 8 and 9 o'clock. Other people are, yeah, a decent number of people are trading full time. So that's why it's different. And maybe I didn't make that clear. That's why I'm differentiating between intra-week on a 4-hour and scalper school on a 5 minute. So what I've gone through with you today is the open trading range on a 5 minute. I talked to you about intra-week on a 4 hour, and I've also talked to you about a 3-wave setup for data. And that's pertinent because obviously we've got the big GDP tomorrow, so I can't write with this pen very well, sorry. If the 150 pip stop is for intra-week trading, so the risk-reward ratio on risking $750 is for a gain of 2 to 3 times that. So it's all scaled up or scaled down depending on whether you are day trading or intra-week trading. If your account, or if you just simply don't want to risk this kind of money, and I understand why you wouldn't want to do that, then you need to, if you're able to day trade it, then day trade it, so to drastically reduce your risk. So you could be risking $100 to $200 for a anything from a $300 to $500 reward. That's entirely, it depends on your risk parameters, the size of your account, and how much time you got. But this is what we're doing in Scalper School: open trading range, data trades in Dow, oil, and the DAX, and at times this does transfer to Forex. Let's have a look at Forex. We trade a lot less Forex in the room these days, and you can see why. This is a 4-hour chart. These waves, you look at that 4-hour chart compared with the Dow, although this is a tighter range, the ability to scalp when the markets are in a nice tight range like that is easier than these big sweeping moves. So we're getting really big sweeping moves at the moment in the pound because of the Forex. So this is a nice trending push to the downside. So this is scalper. We'll look at how the pound reacted at the London Open today in a minute. So you get these nice wave patterns. We're definitely we're in a sort of quite a wedge here. So we're going to get a decision out of this quite soon. So that's going to be very, very interesting where that goes to. Okay, so let's just go to. So let's just have a look at the bigger picture for a minute before then I just want to sort of summarize with you. So here we are just coming into GDP tomorrow, and this weekly chart is flat. Huge selling week beginning the 4th of March, a pickup on the 11th of March week, another lower close. So all these markets are coming to a point where they need to make a decision. We've got very, very nice wedge patterns, so we're about to get, whichever way we break out of this core range here is going to be the potential range for at least into April and May. But when it comes to, if we're up here in April, May, 26,300, any higher because of this sell signal here, then I definitely want to get swing trade short and see if the middle to third quarter could give us some decent sell signals. I always like to mark the first week in the year off, so that's what this bar is down here. Okay, so that's the weekly on that one. Let's have a look at the weekly on the pound. Now you can see this big range. This is the Brexit bar. See, I do like cycles and ranges when it comes to overall analysis. There's the Brexit bar. Typical in a sort of short that we would do is, look at the mid-range. Look at that mid-range sell in April last year. And now we are right on the line. All the politics that are going on in the UK, there's a big buy bar length of March, and we are right on the line here with a completely flat week. Right, I promised you I'd look at this week's pound, today's pound. Let's look at today's pound. So there's nowhere near the sort of volatility you got in the Dow intraday. So here's the London Open. Right, so we kicked off okay at 8 o'clock, broke up. So you get one buy signal. If you're just trading a 5-minute chart, you get a buy signal at the high there. It moves that distance there, equates to the move of that distance there. So it pulls right back into the range, right onto the floor of the range, and slowly grinds out, pulls back, and then it starts to break. And look at what happens when it pulls right the way back. This range is mega in all of these markets, absolutely all these markets. This is the late this is the London close and the US market triggering in. So after this push here, they went right back to the floor again. So that's why this system can work so well. Of course, before I just finish talking about this, just remember that the reason why I've got the anchor is because it can sort of chop around a lot, and you could be right in terms of the direction of the market, but you could still lose money if you don't understand how the anchor system works. Right, let me just, I've already been talking for 40 minutes, so I don't want to take up too much of your time. Let me just go to a couple of slides. I'll go to this one. So you can see, this is I appreciate this is getting a little bit long in the tooth now, but we took 9 months, or the independent study, I didn't even know this study was going on. The study kicked off from 1st of July 2016 until 9 months later on 30th of April 2017, and the system was deemed to be, well, on the DAX it was 74%, on the Dow it's 77%. And over half of the moves that did more than 20 pips traveled to at least to 40 pips. So that's why the system works so well. I've not talked to you about this side, but that's for members. And these are some recent, admittedly not this week, but these are some recent days on my Dow trading, 408. So they're not. I'm not trading huge leverage, but I'm doing decent money, pumping up the account. So I made a loss on oil there, made 600 oil there, and lost 99 on oil there. So just to finish. Let me just let me find the right slide to finish with. So this is the Scalp School program. It's a 4-hour program. The modules include the open range, golden anchor, and we've got several gap strategies. We've got a very specific chart system made up to form the basis of the anchor system, which is unique. The reason why I call this unique is because we're using basic tools, but it's the way in which we mix the basic tools that create the stability in the scalper score and give us that 77%. So the entry system, then we do a lot of simulated trading. We also look at how breakouts can be calculated and how you can trade breakouts as well. And then this is the support program. 6 sessions a week, a very lengthy, it takes me about 4 or 5 hours to do the weekend video. Then we have a Monday night session where I share that weekend analysis with you, and then we've got the chat room running 5 days a week, alerts going to mobile. So this is a heck of a lot of support. This is a 5-6 day a week support for you guys to help you really clock up the pips and make it work. So the next one is this Saturday. There's initial fee for the program, but in order to come on the program, you've got to include the cost of the first 2 months in the trading room and all those services I just listed. So if you're interested, go to scalperschool.co.uk. Halfway down the page, you'll see the PayPal button. If you want to come on board, then book up, because Saturday is the next one. Any questions? Here's the Scalper School link. Gaps on Forex. Now, the only research we've done is on DAX and Dow. 9 months worth of study on the open range on DAX and Dow. I don't have specifics on Forex. I am going to be including Forex in the live trading room. I haven't done Forex for at least 9 to 12 months, but I got some requests to do Forex in the room, so I will be looking at, I will be using exactly the same system for the pound and the euro in the next couple of weeks, or once we get the next program out of the way. But I don't have any stats on that, no. This is, most of the people in the trading room are using retail accounts, so they are spread betting. Most of the people in the trading room. I think there's about 3 or 4 of us out of the team that are trading futures. Everybody else is trading spread betting or CFDs. So the majority of people in the room are trading CFDs and spread betting. The futures guys are in the minority. The reason why I mention the futures contracts is because us guys who are trading on futures accounts can support those who are on retail accounts and bridge the gap between what your broker is quoting and what's actually happening in the live trading room. So what's happening on the live futures market. Good question about these. You know, what's a suitable size for the futures account? I think because of the leverage, I think you've got to have an absolute minimum of $3,000, or about 3,000 or 4,000 sterling to come into a futures account. I actually have a futures and options account for my SIP, for my pension. I have, which platforms do I use? The charts you've been looking at today are actually from IG Index. They're the advanced charts of IG Index, which is supplied by Pro Realtime, a company called Pro Realtime. You don't have to, if you go through IG Index and you trade 3 or 4 times a month on that account, which I do, as well as my futures account, then those charts are completely free. If you go to Pro Realtime Direct, then it costs, I think, at least about £40–50 a month, but you can get that all completely free on IG index. You just have to sign up for their advanced charts if you've got an IG account. I don't know if any other brokers do that. I'm not sure. I really like the pro real-time accounts. I just don't, not that, obviously because IG are making their own book, I'm not that keen on the prices they give me. IG Index do run their own book. Yes, they do. You're absolutely right. That's why, and that's not a problem. That's not an issue with the sort of trading that we do, because I was calling. I don't know if you missed the bit in the seminar that I did earlier on, but I showed slides of calls I was making on to do with hooking up retail traders with what the futures account was doing. So it's not an issue. I think anybody who's got a futures account will probably claim that you're better off with a futures account. But you know, like I said, most people, yeah, okay. But most people have got retail trading accounts. Any other questions? So this is a great day to be running a little intro webinar like this, because we've got some fantastic volatility today. So we're just about coming into the last hour of the US market. So unless the market can start closing above 650, this looks as if we are going to see some. This looks as if this may not pull up. Obviously, we've got this main trend line support coming underneath here on the 4-hour chart, but that is, after all, a significant lower close here. So if we start to fall away now, this and break under 426, that's going to trigger a short trade. You could, of course, scale into the shorts up here. I mean, I prefer, my sort of mantra is, if you're going to short as high as you possibly can, to try and reduce the risk, building on the points that some of you were talking about earlier on. Okay, so anybody interested in coming on the Saturday program, 4-hour program, if you want to talk about it and ask any more questions, happy to do that at another point. Otherwise, I'll finish up here unless you've got any more questions. So I'm still keeping a very, very keen eye out on what the market can do here. GDP tomorrow. What do I think is going to happen? I actually think we can potentially come back through the other side of this Fed bar. There's the Fed bar itself. That's where this range has come from. I think we could, if we start closing above 650 here, I think we could punch back into those highs. But we're certainly going to get a decision one way or the other pretty soon. As far as the DAX is concerned, so I'll just sum up by looking at where the markets are. DAX, similar. It's selling harder. Obviously, the main components of the DAX is BMW, Deutsche Bank, and Volkswagen. That those organisations are, as the times roll on, are going to be hit even harder with these sort of legislations that's coming in on car manufacturer, etc. So that's going to be interesting. And pounds had a pretty good day on this 4-hour chart. You can see that if I take this off and look at this channel, and spent, so we dipped underneath that. That's quite, I find that quite common. You get a trend line, the markets love to come and penetrate it, do a little bit of stop run. So this low down there at 130, we're 250 pips higher now at the moment, just potentially coming back up to that. Oh, that's a nice chart pattern, isn't it? Wow. that could really go some if we start holding above 133. Right. I will be doing this next Wednesday. So if you are trading the pound and you're interested, if we hold above here, then the pullback is 130.22. And if we close above 133, this could really start to rocket. And the reverse is true. But at the moment, we look as if we're going to close up here. So at the moment, it's bullish. Not a great trade, not a great daily chart to trade. So be very careful if you're going to trade that. This is obviously very, very tough resistance up there. Okay, and the Dow, just have a look at, holding up nicely. Could potentially push for 26,000 again. All right, thanks very much for joining me. Like I said, drop me a line if you want any further questions. Otherwise, make sure you're on I suspect all of you are on my mailing list. I'm not going to start chucking out a lot of mailings to you. I'll only do 1 or 2 a week. But otherwise, look out for this session next Wednesday and join me next Wednesday. In the meantime, my throat's getting a bit dry anyway, so I'm going to cry off and just see what this market's going to do in the last hour. All right, thanks for your company. Thank you very much for joining me. I hope that was useful, and let me know if you want to come on the program. Thanks very much, and bye for now.